Eventful weeks for the euro and the pound, and a disastrous week for the Aussie. Joining us to discuss all of this is Valeria Bednarek from FX Street. Following increased speculation on a Bank of England rate hike, the pound lost ground against the US dollar. Do you expect to see a rate hike, and what effect would this have?
Hi, it's a pleasure as usual to be here with you. The Bank of England is widely expected to raise rates for the first time in more than 10 years on their next meeting on November 2, right? But I do believe that the market is a bit more convinced that what Carney is, in fact. During the past meeting, Carney said something like that the market was underpricing the risk of a rate hike, right? And I do believe that's the main reason behind the current speculation that they will pull the trigger this upcoming week. Inflation indeed is at 3% in the UK, and latest data, CBI realized sales yesterday were awful. We have an ONS report also indicating that wage growth has fallen by 0.4% this year when compared to the previous one. So all in one, the scenario favors a rate hike, but we must wonder how much a 25 basis point hike can help the economy right now. I don't know. In terms of price action, a rate hike could, of course, be bullish for the pound. Always considering that most of the hike has been already priced in by the market, right? So the effect should be a bit more limited. But in the longer run, and for the economy in general, it won't make much. I still believe that the pound will keep on suffering from Brexit jitters. That Brexit is the main and only driver for pound in the longer perspective.
Following the ECB interest rate decision, the euro also lost ground against the dollar yesterday. What are your current thoughts on the euro?
Well, the ECB provided a dovish bond buying cut, announcing a larger than expected reduction from 60 billion to 30 billion monthly purchase of bonds, extended it back, however, towards September 2018. Draghi also added that there won't be an abrupt end to quantitative easing, right? Which means that it would probably extend it beyond that date, that September 2018, probably at a lesser amount, right? As long as the economy maintains the growth pace, of course. And what also Draghi said yesterday is that he reiterated his pledge to keep rates at record lows well past the end of quantitative easing. So my thought is that he actually played it pretty well, right? Because he is trimming quantitative easing, yet at the same time preventing the euro from strengthening, which is his main concern, because a stronger euro won't allow the fast economic recovery the area is seeing these days, right? So he played it really nice yesterday. It was his best move so far. Anyway, the euro dollar is not only about the euro. We are seeing the pair right now below 116, with dollar strength, of course, offsetting everything else for today. The ECB announcement yesterday, but we have just had the release of advanced GDP in the United States, which beat expectation. It came at 3.0% against the 2.5% expected, right? And we had also quarterly PCE price, which surged 1.5% against expected 0.2%. That's the Fed's favorite measure of inflation. So it's a hawkish number and a hawkish figure for the Fed, right? It will make the Fed more hawkish. So what's going on in the euro dollar is also linked to surge in dollar strength. I'm not sure if the background scenario is enough to justify this strength in the dollar that we are seeing these days, but this is what's going on. There were also some rumors that on the run to replace Yellen, there are just left two candidates, both considered hawks. So that's adding to the greenback. The tax reform, bill that never came. It's also sounding loud these days for the U.S. So overall, the pair is broke below 116.60, which has been quite a strong support since early August. So if we close the week around current levels or below, I do expect the pair to continue falling. Technical reasons behind it towards 1416, 1480, which has been a major resistance all through 2015 and up to this year.
The Aussie has had a disastrous week, falling against all other major currencies. Is there light at the end of the tunnel for the RBA?
The Aussie has been weakening ever since topping near 0.81 last September, mostly amid central banks' imbalances, right? The Reserve Bank of Australia keeps rates on hold, with the housing sector being the main drag, right, behind that decision. Australian economic growth has been sluggish. Inflation, according to the latest quarterly figures, remains low, subdued, and a rate hike, right, sounds appropriate if it weren't because the Aussie is too expensive, right, according to the Reserve Bank of Australia. A rate cut, on the other hand, is out of the question because it will fire up the property market, right? So a rate cut, will fire up the property market, and a rate hike will probably boost the Aussie and affect the menace the fragile growth we are seeing in the Australian economy. So yeah, the Reserve Bank of Australia is trapped between a rock and a hard place. No, so the market believes that the next move will probably be up, but Governor Lowe has clearly stated that they won't follow the tightening path of its counterparts. At this point, I guess that the best that could happen to the Reserve Bank of Australia is that the American dollar keeps strengthening. In that case, the Aussie could weaken enough to leave some room for the Reserve Bank of Australia to pull the trigger without big side effects for their local economy. That's the only chance they have these days.
Valeria, thank you so much. And thank you for watching. Have a great weekend. Goodbye.